like to call upon my colleague V. Ramkumar to step up to the plate and call his first panel forward.
Thank you, Robin. Ladies and gentlemen, it's a pleasure to actually be here. And we're going to have a series of panel discussions. The first one, the topic of the day, as you know, is about building a future-ready bank. And well, we actually are now seeking to have a business leadership perspective on building the future-ready bank. And with me today to discuss some interesting topics that sets the tone for the rest of the day are some very senior professionals who I'd like to invite on the dais. Let me start with the Managing Director and Head of Global Treasury and Payments Advisory UK at HSBC Innovation Banking. Put your hands together to welcome David McKendry. My second distinguished panelist today is the former MD and CEO at ICICI Bank UK and presently the Board Advisor for Revolut India. Please put your hands together to welcome Mr. Lok Mishra. And my other panelist today is someone who's not only a technologist but also a banker, and he comes with a background that actually is something which I'm very keen to hear from today with his perspectives. The co-founder and board director at ClearBank, Mr. Charles McManus. So we have a topic today which is future of banking. And as Chetan talked about a little while ago, I guess we do see a lot of change happening. And I, when I was talking earlier with Charles, he was saying, look, I've actually been on 4 different summits and conferences this week, and it's fascinating how this is becoming so interesting. And I'll probably start with you, Charles. And I actually want to, start with this topic of. There was a conversation we had earlier with Rajesh, the former deputy mayor, talking about regulations and coexistence of fintechs and banks and everything together. So I'm going to start with a very simple question to you. How does one balance between disruption on the one side and regulation on the other side? And while we actually are building what could actually be a regulated clearing bank. Now, this goes back again to the theme that my friend Robin started by saying, are you disorganized or being organized? From disruption to regulation, please.
Thank you very much. Good morning, everyone. ClearBank was all about disruption. Why was it formed in 2016? And actually it's the back end, the non-sexy bit, that was driving the front end in relation to the fintech revolution. So go back to 2016. All these new apps are coming, power to the user, apps everywhere, real-time everything. But what about the back end? And I've obviously got some of the big 4 with me in relation to their infrastructure and payments. What if you had APIs? What if you had an ISO 20022? What if you had Microsoft Azure or AWS as it was then? And of course the FCA didn't understand cloud. What if you took the fintech front end, connected to the back end, goes through the payment schemes, and you get a message saying, done. That was why ClearBank was actually formed, and we're very privileged today to be able to power all of the major fintechs in the UK. So whether it's Open North, SOPA, Revolut, all of them are our clients in terms of the back end, coming back to that ecosystem point. And then innovation. So yes, we needed a banking license to become a member of the payment schemes. But in inventing embedded banking, using our bank account to power EMIs to behave like a bank. And Tide was mentioned before, that's Oliver and I invented essentially that. Tide is not a bank. All of its bank accounts today of 650,000 SMEs are all powered by ClearBank bank accounts, FSCS protected. And we've done that with Chip, with Capital on Tap, a whole raft of others, and Revolut that hasn't fully got its banking license, all their savings accounts are ClearBank accounts. So, as we will get into this conversation, you don't need to be a bank to play, and that's both a strength but also a threat to the banking industry, which we'll talk about later. Back to regulation. Yes, I've been a regulated banker all my life, all around the world. and work for the large banks. It's doing that innovation and disruption, but seamless compliance with the regulators. We could never have formed ClearBank. We had 26 different stakeholders in a room to actually develop a clearing bank, because you can't become a member of the payment schemes unless you've got a banking license. We didn't have one. It was on cloud, and to FCA, dirty word. And as we'll look to the future now of all that change, the importance of this ecosystem, stakeholder management, regulators, number 10, all the parties to actually drive change to make London still relevant in the new world, fundamental. Perhaps we'll talk about that some more. So you can innovate, you can disrupt, but you must be operating at the highest regulatory standards. It doesn't get in the way of innovation, because guess what? Technology.
Fascinating. 26 stakeholders, did you say?
Absolutely, and in fact it was going back. Chaps is now in the Bank of England, those that are payments orientated. They were all separate. I used to sit on the board of Faster Payments and that all changed. Pay UK came, and it was the CEO of Chaps in that room that said, Charles, we need to turn this into a monthly steering committee to help you do it. And without that cooperation, we would never have got ClearBank off the ground.
Lovely. No, I think that sets the tone for a lot of topic we're going to cover today. And thanks again for the chance. And I'm going to take this question to you, David. And talking about disruption and talking about innovation, we do see fintechs obviously become an integral part of the whole conversation of the ecosystem, right? And very clearly, as Charles explained, you have different degrees of being a bank, from being a fully licensed bank to actually being a bank pretender, as you, I will borrow your phrase there. But I guess the play here is about innovation and fintechs, right? What, in your view, could actually be the fintech role in innovation, but more importantly, how does one help fintechs grow, and how is this actually any different in any other sector? I mean, you see technology disruption everywhere, but if I was to take the financial services industry specifically, and how different is banking from other sectors beyond, of course, the regulation aspect?
The innovation, it's a great question to talk about, because it's on the tin for HSBC Innovation Banking, and we have a lineage that comes back, and I can short circuit it by just saying we were SVB UK. So we have a very unique way of approaching businesses now as HSBC Innovation Banking. So we support early stage tech companies. We also support and bank venture capital and private equity firms. So in our DNA as a commercial bank, not as the area of the bank that is actually doing innovation within our platforms or anything like that. A lot of that happens because it's driven by our clients and our client demand, but we're able to support and bank rapidly growing companies from their earliest stage all the way up through them going public, profitable, and enabling all of their growth, while also being on the other side and banking the venture capital and private equity firms. So when we think about the role that fintech has played with banking or banks, because those are two distinctly different things, and you touched on them too, where there are banking apps when we have to, put that probably with a smaller b, because they're regulated in a different way. You can get banking services from a Tide, but it's underpinned by a regulated entity, and that's why it's actually fantastic the way the regulator plays a role of enabling this ecosystem here in the UK. We see how it's unregulated and regulated in a much different way in places like the US, and that infrastructure can have some very big challenges because there are entities at play towards the end user that are unregulated. So that role of fintech and how it has challenged the bank providers, legacy banks, if we want to call us that, has been, I find it fantastic, because we've embraced the fact that our clients are very vocal. A fintech puts the voice of the client and the problem statement right at the forefront of whatever their solution is. If we go back to 2016, and we remember all those slides that were in different presentations where it was, depending on which side of the pond you were, it was Wells Fargo on one side and their website, over here it was Barclays. and it was a single line with hundreds of fintechs that were branched off of it, and each of them were monoline solutions that were attacking little problem statements that people had with banks. If you look at it now, you actually say the banks were the super apps. That term wasn't there. So you had these problem statements that, oh, my payments don't integrate the right way. I don't like how my mortgage process has gone with my single bank that I'm working with. And you had people attacking these problem statements. What fintech, I think, has brought into and challenged the banks is the fact that you can be hyper client focused, then you can solve a problem, and then you can rapidly iterate. Those were things that banks historically have not been able to do because of size, scale, scope, regulation. You talk about all the regulators that you worked with. I remember those conversations of back in 2016. We want to go cloud native in terms of infrastructure. Bring the regulators around that. We're going to touch on AI. That will be a whole other bucket of worms when we start thinking about the regulatory view of that. So fintechs have done what we used to like to say under our old lineage, and we still think about it too, is we poked the bear. We did all these things where banks were like, oh yeah, some of those payments, some of that FX went that way. All of a sudden fintechs took more and more, they consolidated, they went from monoline to super apps in terms of Revolut, and other platforms have taken lending, deposits, FX, put those all together. Those are the bread and butter of banks, and so it's made that impact. So now, banks are on this journey of how do we solve this? How do we make it easier? How do we put actually the client experience? And this is where I think our lineage and the way we approach things within innovation banking is, what is our user interface? What is our user experience? Our CX, that is the most important thing. Our channel is the most important thing because that is how our clients work with us. The product, which is it a faster payment? Is it a card? Is it this? It's how it actually is onboarded. What's that journey? And that, I think, has been one of the biggest pieces that fintechs have challenged the banks, and we're now thinking about it differently. Yes, it has forced us then to rationalize our infrastructure. Think about the term that always comes up, the spaghetti into lasagna, in terms of all of our disparate systems and where does our information lie, and again, we'll get into why that is going to be hyper important when AI comes up. That's been, I think, one of the biggest effects of fintechs. You then ask the question about, well, how do banks and fintechs work together? Well, one, ClearBank, you guys work very distinctly with fintechs and let them ride on top of a great infrastructure. We do the same thing in innovation banking where yes, there are client monies, there are payment rails, there are ways that we lend into these platforms to enable them because we see them as great ways to grow our business where that is a one-to-one connection and they own then client experience and client acquisition on one side. It's a great way where we can grow our platform, very similar to historic agency and correspondent banking. But also, then you dip into, well, where can a fintech enable us? How can we bring a solution to market faster? Where can we partner? Where does it place us into a marketplace in a unique way, either as a new acquisition channel for new types of clients? Where does it put us into a channel where our clients sit that we can actually interface there because they don't need to come to our online banking. They are going to work with, for our clients, an application like Xero or NetSuite. Well, I want to be embedded into those platforms. They don't need to come into my front door to get them. That's how we do it. So we work really closely that way. So those are the ways that it's changed a lot.
From monolines to what you would actually now, from quote unquote the spaghettis, to what you would like to actually call now as a very different ecosystem that is embedded. You know, that's, and I think your key message here is the more you actually engage, the focus should zoom further. Hyper-focus, as you call it, has to be on customer experience and ensuring you're delivering what ultimately your customer needs. But I actually want to take that question at a strategic plane to you, Look. You know, you've been a banker for many, many years, and one always talks about, you know, technology dovetails from your business strategy, right? And we talk about, you know, you need to know your strategy so you could align your technology. Now, question is, you know, the cause and effect. How true is that statement today, you know, in 2025? or is it getting more of the inverse? So where do you see the alignment between business strategy and technology adoption as banks continue to evolve with what we see as fintech participation?
Thank you, Ram, for organizing this, and thank you, Chetan. I think you set the context wonderfully, and Charles and David, I think wonderful context setting in that sense. I think everybody is primed to sort of the topic of the day. In the traditional model, you are right. First, you have a strategy to decide what you want to do, what problem you want to solve, and then find out what technology best fits into the strategy, right? That has been the traditional model that most of the businesses have followed. You're right, I think that line is getting blurred. I won't say it's probably inverse yet, but I think they loop and feed into each other quite significantly, and they need to do it. So you would have, all of you know the story of Kodak, and you know the story of Nokia and all of that. But this is necessitated by the fact the change of, speed of change has, with AI, Gen AI, has become at least now 10x. And that change means that you have to be always paranoid to see what's happening in the world. I'll give you a latest example, and since it is reported, I can quote the name. I came about hearing the genetic AI revolution in the advertising industry. That was probably about a year back. Somebody showed me one case study of how within 15-20 minutes you can create an ad. And then after a few months, somebody showed me a very nice, sleek ad created by Unilever. If some of you would have seen the news item yesterday, WPP, which is one of the biggest advertising company, they are are now being forced to transform completely, because the business model of advertising is completely being upended and changed. So this kind of changes, the speed of change will be much more faster, and unless you are alive to what's happening in the world, you should not be surprised if you get sort of taken over by new players. In the context of banking, of course, there is a layer of protection, so to say, that gives some bit of comfort to the legacy players. And that layer of comfort in terms of regulation is for the right reason, because you are dealing in much more significant way in terms of public money. So in UK, if you are a licensed bank, you can raise 10 billion deposit almost overnight, colloquially, but in a matter of a month, 2 months, right? And that's a huge amount of public money you are dealing with. So there needs to be regulation to ensure that that money is safe, it is run in a manner which is sound and robust and all of that, for sure. But if you look at some of the data point, and it always happens, as people say, you overestimate the change in short term and underestimate the change in long term. If you look at few data points, so for example, there is a significant disintermediation which is taking place, and which, if people don't realize, they will need to change the business model significantly to survive in that segment. It may not necessarily be bad, maybe that is the way forward, but one has to recognize and change the model. So if you look at areas like, we saw the slide from Chetan where he talked about neobanks capturing 40% market share going forward. That's massive, right? That's massive. Last year, 60% of SME loans were not done by traditional banks in UK, 60%. All of us know the rise of private credit, how they are disintermediating the business of big banks. These are few data points, these are subtle trends, but these are the trends which become significantly amplified as you go along. I think other change which is coming, I see, and I think Charles very nicely mentioned about ClearBank, is a very good example, is my sense is 2-3 things. One is, today the banks are vertically deep. They do everything from A to Z. That's going to change, number one. And I think ClearBank is a good example that it's possible that bankers become infrastructure service provider because they are best in managing the risk and the various stuff around it, keeping the money safe and stuff like that. And lot of front end gets dotted by marketplace and fintechs and API and all of that, and then they ride on something equivalent of what ClearBank said. Today I see there is a little bit of tension between banks and fintech. I also see that banks want to become a fintech and fintech wants to become a bank, and that creates a tension because it's not easy, because the two are two different kind of mindset, two different kind of thinking, two different kind of business. So I'm not sure how this experiment is going to play out, where a bank wants to become a fintech and fintech wants to become a bank. And let me tell you, both of them are struggling. Both of them are struggling in their journey to become from fintech to bank and bank to fintech.
The grass is greener the other side.
It's always greener on the other side. Probably I think the right model is going to be a model where both of them coexist and feed on each other's strength. And that is where I talked about banking becoming more like a service and infrastructure and a rail line. It's something like you may not have a broadband and the network, but you can become a mobile operator. It's something very, very similar to that.
Good example.
And again, the second thing could be that you may not necessarily manufacture everything, but you have to give the choice of whatever available in the market to the customer. Customer is not going to be wedded to what you have to offer.
Got it.
You should be able to showcase what all is available and let the customer choose what they want.
Very, very fascinating thoughts there, Lok. And I guess very critical takeaway is to say that, you know, banks are actually offering, or the traditional thought is to go deep, vertically deep from A to Z, borrowing your phrase, but that may not necessarily be true, and you may actually be looking to specialize in the areas of your focus. You may not necessarily have to do everything, you may just be the infrastructure service provider and actually be able to benefit from the ecosystem. And bankers could actually be morphing their roles to be different. And I'm going to take that to you, Charles. And this is a very serious point of view on the future of banking, as we call it, right? If we were to take the point Luke just made about what banks will be doing and therefore what bankers will be doing, what happens to the operating model of a bank? So if I have to visualize the target operating model of a bank for the future, how different is that going to look like from what it is today?
Alan, it's a great question, because naturally boards of banks, regulators, culture, in fact anyone that is in banks will know what I mean by the SMR regime, which and authorizations and the joys of being in that regime. If you take the bank traditional structure, 3 lines of defence, right, first lines of risk management, internal audit, all of those models that we've had that have served the banking industry sort of well in the past, are they relevant to the future, and exactly how do you iterate from that? And of course, as a CEO of a new bank, and in fact we call ourselves a fintech with a banking license, even though I've been a banker all my life.
You just talked about the grass greener there.
Exactly, but you needed the banking license. I was spending all of our times, whether you're HSBC or whether you're one of the newest banks, all of those verticals, how do you actually keep looking at the horizon? I mean, essentially your end-to-end process to deliver that to the customer experience, seamless in relation to the bank. And one of the things at ClearBank when we started was those customers leaving NatWest or whoever it was at the Big Four, we never get hold of the CEO, they never tell us the truth. When there's an incident, it's never their fault. And it's really hard to manage our customers when we don't know what's going on. When we talk to the smaller banks where the silos are not so great, everyone seems more joined up, there's transparency, etc., etc. How do you keep that as you grow? Well, of course, the models now then of AI and actually going horizontal. How do you design your op model in relation to that? Fundamental you do, and it's going to change. And if you think about fintech and how we've grown, right? What was the model at the start? Get all of the functions with technology and a customer, and put them in a padded cell. Keep iterating until you come out with a product, right? Break down those silos, get all the disciplines, and it normally, and I'm very in favour of regulation, it's compliance or somebody, oh, but you've forgotten this. You've got to get, and the trick clearly is to get all that horizontal to actually go. Bringing AI in that as well. And as a sidebar in the conversations that I've been having essentially on the Unicorn Council with the government and regulatory change, that even the FCA, one of the things we're talking about is actually getting rid of SMR and putting the responsibility on the entities, the banks, to do it themselves, and getting rid of all of that. You know, everyone can be checked out whether we're criminals or not. What's the value add in relation to that process? Anyway, that's another topic for regulatory change.
Yeah.
So I think it's really important in looking horizontally and then how you organise. Of course, you then want a second line in terms of risk management, but again, that's changing in terms of the nature of risks you're trying to manage. And then, of course, you need strong assurance and third-party assurance in relation to it, but they've got to have a growth mindset with independence of what they're doing to bring value
The
add.
perspective is hard to miss there, Charles, from Loke's comment about going vertically deep to your view on have a horizontal perspective. I think we're seeing both perspectives there. No, thank you for that, Charles, and I think that's talking about how things are evolving and what you will need to do to keep in the regulatory context also in play. But I have a question, I'm taking this to you, David. Well, we do have the horizontal perspective that Charles that talked about evolving, and you will have to be dealing with, whether you like or not, with dealing with the new roles that Loke talked about, where you are playing an infrastructure role, quote unquote. What does it mean in terms of skills, the culture and the leadership that would be required to be played for the future?
I mean, skill-wise, and I think this started with, as we were talking about it, within AI, because that's the most emerging piece of skill and newest one, because if we look at what AI is doing within the industry and the clients we work with, it is being called a super cycle. There are these revolutionary cycles that happen once every 10, 20 years in terms of how disruptive the technology is going to be, how embedded it's going to be in nearly everything, investments that are going to go into it and what it really means. And I think AI is one of those. I think the last one, when I think about it, it was cloud for the most part. And that was born out of, in the early 2000s when there was the dot-com boom, some of the highest paid employees of those companies were actually the network engineers, because every one of those platforms had their own data center. Come the next wave, it was actually moving into the cloud, which enabled the next rise in the 2010s, and what we rode for the last decade or so was cloud-based, which then was as a service. So as a service wasn't so much of a super cycle, but it was enabled by cloud, and that changed how companies operate. As a service changed what you were built upon, it changed how you charged and interacted with your clients. Gone were, we lived this as a bank because of our clients, we had to find ways of lending to clients who were going from a license model to as a service subscription model. So that was, this lead up, and this is all setting context here. AI is this next super cycle. I think one of the first skills is, and I don't want to say it as a cop-out, it is actually, it's understanding and being educated about AI, how it works, what it does. Right now, the best thing about AI is that it incredibly works. How many of us have just started using ChatGPT, and because it works so well, what types of personal questions are we asking in there? What types of data are we just throwing in there and having it work on for us? It just works, and at a personal level, and even probably some businesses are using it like that. In a highly regulated industry like banking, we have to think about, well, how does it really work? We have to understand what are the risks, what is public-private in terms of the AI piece of it, and think about our data, our governance, and how it fits into regulation, which has to evolve a little bit to make sure that we're allowed to do the same way it was allowing us to put our core services into AWS or into Google back in the day with those. So I think that's one of the first skill sets. And I come from a generation now, and I'm now all of a sudden going gray, so I'm digitally enabled. I'm used to working within Excel spreadsheets, and I have a generation of people who work for me that are enabled by, just out of the gate, not only are they using a spreadsheet like the way I did to create and manage data, they're programming in Python. My kids are learning Python as 5-year-olds. But there's a whole host of understanding what AI is going to do and developing that skill set that we have to add in as banks. And then I think the next most important skill set, and what we're going to lean on the most then, is our data governance and data risk. So our risk stewards in all those areas are going to become like the network engineers of the .com era. They're going to be the ones that enable all of, and legacy banks have information in lots of different places. And we have to tie it all together. We have to then learn how we put it into the models, partition it from a risk standpoint, and then be able to use it. Those are going to be, that's going to be the biggest, most immediate skill, because if you can take hundreds of terabytes of data and put it into an AI model in a matter of minutes, in less than a half hour, half a billion terabytes of data can go in and be processed. Again, it gets back to these things work and they're so easy. We have to do it then and have the skill sets that allow us to enable our bankers to have better conversations, which is going to be the first step. Then enable our clients to have access to this, build products upon it, and then grow into an era where we build agents that at some point, like APIs, talk to each other and say, oh, give me information, here's your information. And at some point, there's agents within that stream that are actually having a conversation. We have to know that our transactions are going to work like that, our clients are going to work through that agentic AI without people in the middle of managing those conversations.
Interesting, very interesting, David. You know, I was just reflecting, I mean, had we had this conversation maybe a decade or two back, people would have said cloud is what you see in the skies, Python is what you see in a forest, agents are what you see in a James Bond movie. Who would have thought this is what we're talking in a banking conference, right? But lovely, David.
Who said banking was boring?
Who said banking is boring? That's right. Well, I think, you know, we actually have, you know, if people don't realize, you know, in the panel here we have someone who is a founder of ClearBank, we have someone who's working for HSBC Innovation and formerly Silicon Valley Bank, and we actually have a member of the board of Revolut India, and you actually find, you know, there's one element, you know, in this conversation that is very important. I'm going to take that to your look, and this is, as banks increasingly become global, as just we are seeing in your own context. And as we see, the skill sets are also becoming global, be it the demand or the supply is becoming global. As the operating models become global, what happens to cross-cultural, you know, requirements to actually be successful as a successful bank in the future? I mean, talking about future of banking, what's the, I mean, we do know, David talked about those fancy agents, but I'm talking about, you know, what happens to culture when it comes to people.
Yeah, that's a nice way to put me in a sort of position which is completely different from what I talked earlier. So we talked earlier about strategy, now we talk about culture. So as people say, culture, it's a strategy for breakfast, right? I think one of the big things which everybody knows and talks about is, in today's world, whether most of the industries, but including in banking and finance, the big issue is not technology, big issue is culture. And it's not so much of the fact that what you can do with technology, what you cannot. I think all sorts of solutions are available. But the big problem is, how do you adopt that? How do you use that? Unfortunately, I think in my mind, banking has been a very traditional business, so to say, in that sense. And also because of the regulatory expectation, also because it has not had that much change over the last many years, unlike many other industries. The internal cultures are very traditional, so to say. So if you look at, imagine the culture of a big bank with solid structure, first line, second line, third line, compliance, risk. It's very, very tight, structured, governance, control, processes, all documented, hundreds of pages into various policies. If you go to a fintech, it's completely different kind of models, right? So as banks become technology companies,
There you go.
I was actually talking to one of the neobanks and asked how do you operate, because when we deal with technology it takes so much time and stuff like that. So he said, no, in our case the bank is run by 500, 600 engineers. They are my front end, they are my front facing guys. Whereas in a traditional bank you will have a business guy and the technology guy as a back end, and the business guy is talking to technology saying this is what I want. In case of a neobank, the technology guy will say this is what I want to change now. So there's a big difference in terms of thinking pattern between the two guys. So I think if you look at culturally, there are significant issues that the banks need to address. And within that context, the big issue is how do you retain some of the good practices of the risk management and governance and control, and yet be agile, risk-taking, flat structure, fast decision making, all of that, how do you do it? So, lot of things which is demanded of a fintech or technology culture, sometime in that sense is little bit against what banks have been doing so far. So merging the two is going to be the challenge, and the winners will be the guys who are able to take the best practices of both the worlds and sort of make a success out of that. So big issue, for example, are siloed structure versus a structure which is fluid, which is collaborative, where people are working together to find a solution to the customer problem. Issues are ability to take risk and fail. Yeah?
Fail fast.
Fail fast. Issues are flat structure. So you would like a guy who would be able to walk into the CEO room and say, this is what we need to do, rather than go through 5 committees and decide after 3 months of brainstorming. I think a lot of these issues is what banks will struggle with. A lot of the other issues what fintech will struggle with is to say, guys, there is a risk management, there's something called compliance, there is something you need to do. And this will be a constant tension between the two, and I think winners will be the one who are able to very effortlessly and seamlessly manage both these tension, or live with a world where they collaborate with each other.
I mean, I probably have to borrow Robin's phrase again, be organized in a disorganized manner, yeah? So that's where it is. I'm going to open up the questions to the audience, and before we have questions from the audience, I have one rapid fire round. I mean, just a 30-second answer from all of you, and same question to each one of you. Since we're talking about the future of banking and building a future-ready bank, if I was to ask you, Charles, what's the one investment or shift that a bank needs to make today to be successful 10 years from now? What would it be?
So it may not be an investment, maybe back to our ecosystem and partner, digital money.
Digital money.
So we know, I know it's got to be 30 seconds, right? All from the blockchain, smart contract, AI, and the rest, there is a payment rail sitting there. The global war that's going on, from Circle to Stripe to wherever it is, the domination, it started with Facebook and Diem, is trying to get control of the world's payment systems. And it's not faster payments or banks or chaps. Cross-border stable coins, the US, all the momentum. I've been in conferences all this week in relation to how does London play its role. Yes, okay, lending and all the fantastic products in relation to competing all of that, retail banking and business banking. Back end, there is a big revolution coming. It doesn't matter whether you're a bank or what you are, we actually want to get control of the movement of money in tokens. We mentioned Gen Z, right? They actually don't know where the money is. They trust in tokens on a platform. And the world is going crazy in relation to crypto, if you like. That technology is now becoming mainstream, and will institutions start playing, will regulators play if we don't have central bank digital currencies, we have stable coins to move money. Anyway, so digital money, I would say, is
digital money, and if it is not central bank, then it is crypto, and so there people have stable money, and people will have to now wake up and smell the coffee on digital money. Yeah, thank you, David.
And I agree with that one. I I see it, and I'm going to be pragmatic and cheat and say two things, because I think in the next 10 years and by the end of the decade, hyper-focus has to be on user journey, CX, UI. That's for banks. We have to focus on that interaction because we can control that right now.
Yeah.
I think at the same time, this is why it's a two-part question, the longer journey we have, and this is close to the end of that decade, is our digital infrastructure has, and we are all on the journey, has to be rationalized so that we can unlock data, unlock more nimbleness within our platforms. But we have to, in the meantime, it's focusing on user journey to get that before the end of the decade, because that's how we keep our clients.
Interesting. User journeys and digital infrastructure. Luke?
I'll give you 5 second answer in 30 seconds. 5 second is change your mindset.
Change your mindset. I like that.
So that's the first one. It has to change to be much more agile, innovatively talked earlier. I think other big opportunity for banks is, if you recollect, there used to be a very important relationship between a branch manager and a customer.
Mhm.
That got lost in this digital journey. It becomes anonymous and stuff like that.
Yeah.
I think there is an opportunity for banks now to use technology to create a relationship with the customer,
Fascinating.
which is hyper personalized,
Mm.
and talk to him as if you are talking to him across the table with a cup of tea,
Not a customer number.
not a customer number, and understanding this whole customer, giving them solution what he needs, rather than saying, look, this is my product, will you buy it? I think currently that's what I mean. You get hundreds of email, and that's the reason most of the emails don't get read, because they are not a requirement.
Correct.
But you should be able to engage a customer and give the same service what you would have given across the table.
Lovely. Thank you, Luke. Any questions from the audience, please? I see a hand up there, please. Mr. Kaza?
Hi, thank you. I'm Prabhakar Kaza, two of you might know me. I started off in 1986 when I came to this country on a fellowship. You could open a bank account on a simple vaccination certificate given by the NHS. Very simple. Then I joined, of course, HSBC about 2005, and they said you must be able to open an account in HSBC to get your job confirmed. I was so scared that 1 week that I was there. Went to the bank and it was over in a matter of about half an hour. They said, you'll get your checkbook and your debit card back home. This is 20 years back. And banks have become user-friendly, like he said. I worked for 10 years in HSBC. I now had a bank in Hamilton is a bank in Caribbeans. It's a very offshore bank. Different model altogether. But when you go to a bank now in UK, it takes at least about 2 weeks to open a personal account, and almost about a month to open a company account. If this many of these kids, I'm very happy to see so many faces bright and shining. Can tell me why is it that one of the biggest bank in the world takes this much of time out there? I'm probably equally guilty of all this, but still. Thank you.
Well, so why don't you take that question, Charles? I mean, you're talking about.
I'm not at the front end.
You're not the front end. So you already
So
see
we
people
can-
getting standards.
So I
Okay.
mean, we talked about Revolut can do it in a day, right? In terms of a business account, there is still a massive variance. We can onboard clients, right? If they're UBO, their documentation, everything else. The UK, I mean, you can't help get into that conversation in terms of digital ID, right? Compared to China and the rest of the world, and everyone trying to get. If we could get that, your mobile phone was yours. So all these friction points are onboarding. Every bank I've worked my whole career, it's been the worst process. How do you streamline the onboarding process? And a lot of people have worked it out now. I think the fintech banks are actually quite good, but we're still constrained by a lot of the FCA checks, FinCrime, UBO checks, essentially, and that data, it's not seamless. And if you hit a query or an RFI, then starts all the loops. AI can do a lot to do that. But anyway, the Big Four or whoever at HSBC should try and answer your question.
Yeah.
Right?
And I love that story, because that I have a very similar journey. Before I knew anything about HSBC and I was living in the Bay Area to move over with SVB about 10 years ago, I walked into the Palo Alto HSBC branch because I needed an account when I landed on the ground to be able to get a mobile phone, to get a place to live with my 4-month pregnant wife. And we're, how do I do this? Well, you walk into an HSBC branch, you onboard in the US, and they help you, over a matter of weeks get the account in the UK or around the world. And that was an amazing service at that time. And before that, to be able to do that, there weren't many banks that you could do that even at that speed. And it gets back into how fintechs are pushing banks and what their experience are. I mean, why does it take 2 weeks to onboard a personal account? Do I cop out and say regulation, old processes? I think those are all in that. I do really like how fintechs can onboard clients very quickly, and what they have also done though is it still happens on our side when you open up a bank account, and you get it that yes, we are going to do transaction monitoring and things like that. There's a lot of things, whether you are onboarding with a merchant processor, a fintech, or even a neobank or something like that, they will open your account very quickly. But then there are times where they will very quickly actually freeze your account or ask you to close the account. You've put in too much money, or you do these things. They've put checks in different places to allow for a great experience. And they're beholden to the same regulation as us. They're interpreting it a little bit differently. Whereas I like to think you get your account, that is your passport, it is fully functional, you're not going to bump into it. We have that experience on the innovation banking side because our clients have really unique beneficial ownership structures. They're early stage companies. You can think of it, 2 people in a garage that are opening up their first bank account. They have used banking apps. They're coming from those, but they also have investors behind them that are VCs and things like that. So we marry technology to make it as short as possible. Ask the question one time, get an address, get an ID, get this information, not 5 times over 5 or 10 different forms. Do that while also having a human agent who ushers them through that process and take it where something that actually could be months, we can get it down into a couple of weeks, which is good. We want to do it faster, enable more technology to do that, but we have.
But we still have some way to go. I mean, it's a journey. Yeah. Look, I've been given some nasty looks from behind, so I need to close this panel. May I request that the question you wanted to ask is at the next coffee break. I mean, the panelists are available. I guess the next panel has to start right now. Ladies and gentlemen, may I request you to put your hands together to, thank this gentleman for